Alright, that should be good. Alright, going live. No.
Great.
Alright, we are live. Hello everyone. I'm joined here today by
Hello.
number one Shrek fan. And we're debating fractional
You
reserve
can call me
banking.
Alexander, by the way.
Alright, that works then. Actually, I don't want to speak, do number one Shrek fan for every time. So yes, you said that you are a Marxist, but you're willing to accept, for the purposes of this debate, the libertarian property theory. Is that right?
Exactly, yes. I'm going to give a bit of context to that, how that argument even came about. Since, as I usually do, I was talking to some of my libertarian friends on my server. I have a lot of libertarian friends since I think that libertarians and Marxists usually view themselves as enemies to a greater degree than they usually should. But I was having a debate like usual, or actually just a normal discussion, in which the topic was rather unusual, because usually I'm just talking about either Marxist metaphysical and epistemological approaches or my virtue hedonist theory of ethics, but that was an economic discussion, which I also quite like, but isn't all that usual because it's such a particular topic, and it just started as like a side mention. I am very critical of the existence of financial interest, aka people getting money just for happening to have money. And I, just as a side note, said actually ANCAPs probably, at least indirectly, would dislike that too, since I imagined in an ANCAP society under the free banking model, there would be less interest, since there's no Federal Reserve to artificially prop up interest rates, while others argued that the Federal Reserve would get it down. And the core thing where our difference was I assumed that an ANCAP free banking system would be on a fractional reserve basis, and because of that, I assumed that interest would be lower than in a Fed-regulated fractional reserve system, since now there's no longer any bonds to drain the reserves that the Fed sells, and there's no longer any limit on how much you can lend relative to reserves, which you would also usually be set as a maximum in most countries by the government. Like, you need to have at least 10% in reserves of what you loan. You had in the US, and with that gone, I assumed interest rates would be lower since the credit availability would be higher. So the crux of the issue turned out to be that particular issue, and it boiled down to the argument of, would fractional reserve banking be allowed in Ancapistan or not? So that is why I wanted to focus on that particular issue. And if I somehow do manage to convince you that yes, fractional reserve banking is compatible with the non-aggression principle, then I do think that we could also move this discussion on to would it actually happen? So not would it be moral to happen, but would it actually happen? Would people actually do fractional reserve, or would that be something that they wouldn't do in a free system? So that is also discussion we can move on to if we reach an agreement on the NAP issue. But since the moral issue was the one that was more dominant in the discussion, that is the one that this debate centers around. That's why I accept the non-aggression principle for now. I'm just going to say, all right, it's all good, but because I think interest would be lower in an ANCAP system, therefore, and that was the major issue, is it moral or not within the ANCAP framework, I am going to accept the ANCAP framework for the sake of this debate, and we're going to discuss whether it is permissible or unpermissible within that framework.
Sure. So basically, the reason why you can't have fractional reserve within under the anarcho-capitalist property theory, is because the theory of property is built on for the purpose of avoiding conflicts. That is the entire reason we have property rights in the first place, because people can come into conflicts. Now, if we imagine that we had multiple property titles pointing to the same piece of property, then we can't avoid conflicts over the use of that property, right? If both Crusoe and Friday own the same thing, then how do they know what to do with that thing if one of them wants to do one thing and the other wants to do a different thing, right? And you're going to have that if you have fractional reserve. So if a bunch of people, A up to Z, they all put some gold into a bank, right? And then the bank takes 20% of that gold out and loans it out. Well, and it's saying that, no, everybody there, all A through Z, they still have a claim on the gold in the vault. Well, then you're going to have multiple people with claim to the same gold there. Either that, or you say that they still own the gold that was then loaned out. So either way, the bank is committing a crime. Either they're stealing from people and loaning that gold out, that's what I think they're doing, or if we allow fractional reserve within our property theory, then that means that A through Z, they don't have any claim to that gold that was loaned out, so they must own the gold in the bank. But then you must have multiple titles to the same piece of property, and therefore you couldn't avoid conflicts over it. So it has to be, that cannot happen in your property theory.
Mm-hmm. Yes, I think this is based on a misunderstanding of how the accounting behind fractional reserve actually works. Because in a fractional reserve system, when you go into a contract with a bank to have a deposit there, on the bank's balance sheet will appear the asset of whatever you deposited in the bank. I'm just going to say dollars, just if you're opposed to dollars, just think it as Bitcoin or gold bars or whatever. I'm just going to say dollars, since whenever I'm giving these examples, I'm used to that. So if you deposit your $100 in the bank, what happens in the contract as well as in the accounting is that the bank now owns the $100 units, while what you own, what the bank gives you in return for you giving them these $100 units, is a claim of we will do payment services up to $100 for you. So the actual $100 become the property of the bank, but in return for you giving them this property, they give you the property of we are going to pay up to $100 worth of stuff for you whenever you swipe your credit card or whatever. Therefore, the actual money becomes that you deposit becomes the bank's property, and what you get in return for it is the property of the payment services that the bank offers for you in return. So when we have fractional reserves, so when more is loaned than is in reserves, that simply means that we are now, in the exchange for interest payments, we are now giving somebody, we are enhancing this payment right. So if you have the $100 deposited and you get the payment rights for the $100 in return, and you take out a $20 loan, then what appears on the bank's balance sheet as an asset is this person owes us $20 plus interest, and what appears on the other person's balance sheet is I get payment services worth $20, but in some time I'm going to have to give it back plus interest. So therefore, there is no conflict arising, since the actual currency units that you deposited in the bank become the bank's property in exchange for the payment services, instead of there being multiple people claiming the same thing, and you might say there, all right, what if the people have more claims now than there's actually deposited? What if everybody wanted to use their claim at once? Well, because that debt became an asset. First of all, that's my first argument. Because that debt became an asset to the bank can now use this asset as a leverage in order to make payment services instead of using it for their vault. And of course, there would be some people who would still want the actual cash money, but then the bank would have to take that out of its cash pile. But that then would just be the bank using its one of its assets to fulfill the payment services, and it wouldn't be the bank suddenly just stealing money from someone and giving it to someone else. My second argument, in case you are saying, all right, but that carries a risk if everybody wants to make payments to people who will only accept cash at once, and you have more cash payment claims than you have cash deposited, then what is that as long as the person is informed about if that scenario happens, then you may not be able to make these payments immediately, but they were informed about that and they consented to that when they made the agreement with the bank, and they didn't think it would happen because it is generally a reputable bank, then they just knew the risk and agreed to it. So yeah, that is the basic argument I'm making.
Sure. Basically, I disagree that this is how... I agree that if you have a fractional reserve casino game set up such that, I transfer a certain amount of money to the casino, and either it hits or it doesn't, and then they'll give me money if I win, right? And I can come and claim on it. I agree that that's fine. That's not fraudulent. But I disagree that that's how any modern banking system is actually working in practice. I'll give you an example. I've got some cash notes on me right now, and it says the Royal Bank of Scotland PLC promises to pay the bearer on demand £20 sterling. Now, if I brought this to a bank, they would never, no bank on earth is going to honour that promise. None of them will give me £20 sterling. They would all laugh in my face if I came up to them and said, give me my £20 sterling, right? And
yeah,
so we already know that they're engaged in massive amounts of lying, and that is already fraud right there. And that is tied in with the fractional reserve. That, you know why they won't pay me £20 sterling? Because they've debased the currency. Because they engaged in fractional reserve. They don't actually have £20 sterling on hand. It's all fiat now. And, I don't know if anybody's done this experiment, but I guarantee you, you go up to 100 people, just random people on the street, and you say, hey, if you go up to an ATM and put your card in and check your balance, whose money is that? 100 out of 100 of them are going to say, well, that's my money, clearly, right? Every single person operates on the premise that it's their money in their account in the bank. And this is entirely logical, because that's what banking has been throughout all of history, right? Throughout all of history, it's been money warehousing. That has been the function that a bank has served. Now, the way they've conflated this, the way they've done this, is certain banks decided to get a little bit cheeky. And they decided that they also wanted to get into investments. And where could they get the capital to invest from? Well, what they did was they just stole their customers' money. And that's where fractional reserve came about. And they got away with it because the government let them keep going. The government allowed it to happen, and the government kept it going. So this is only a thing that's come about because of aggression. It was never the situation that people went up to a bank to invest their money. That isn't where you go to invest your money. You go in Robinhood or whatever.
Yes, while I can see how people being ill-informed about the accounting behind banks can be an issue which could be called fraudulent, that doesn't mean that the concept as such is fraudulent. Like, do you agree that, just on a purely theoretical note here, do you agree that if no step within a process is an aggression, then the entire process is a non-aggressive process? That's logical, right?
Yes.
Yes, good. So I am going to walk you through the accounting process of fractional reserve step by step, and you're going to tell me where the aggression happens.
Sure.
Step 1: a bank customer deposits their money in a bank. On the bank's balance sheets, the cash appears. On his balance sheet, the number on his account appears. He's aware that this was a transaction. He's an enlightened individual who actually knows how banks account this stuff. And maybe the bank even itself, or hopefully the bank itself, informed him about it, because, like, I agree, in today's world where financial education is sadly under-prioritized, the banks shouldn't assume that customers know how their accounting works, but this is how it appears on the bank's balance sheet. I'm just going to
jump in, because that is the step where I think there is fraud. I just wanted to step in because that is the step where I believe there's fraud.
Okay, yeah. But I think while you can make a case for it being fraud in practice, because people are not informed about this, because they do think that it's literally just a money store, that is why I assumed, or why you can assume that, at least on a theoretical basis, it would be fraud. But like a bank that actually informs their customers about the nature of their accounting, and perhaps even
the reason why I think it's fraud is because they're still calling themselves a bank, and that's not what a bank does. A bank isn't an institution that takes your money and invests it for you. That is not what a bank does. A bank stores your money for you, potentially for a fee, right? That is the role of a bank. So it's that you're calling it a bank. That's where the fraud is. So it's like they're saying, it's like they've got a big sign up front saying, we will store your money for you and keep your money safe. And then when you come in, they're like, oh yeah, and by the way, we're going to be investing this money. Don't worry about it. That is fraud.
So your problem is basically that it is called fractional reserve banking and not fractional reserve investing, basically.
Yeah. It would be fine if they called it a hedge fund, and you put your money in this hedge fund, and we will invest your money for you. That's completely fine, because that's not a bank, right? It's that they're calling it banking, because this is not banking in any way, shape, or form. And the only reason why it's going on, why people aren't calling them all hedge funds, even though we have the concept of a hedge fund, is because people are still considering these things banks, because they're supposed to be banks, but they're engaged in massive amounts of fraud.
So I will accept that how banking is practiced nowadays and the premises under which it operates could be considered fraudulent, but that doesn't mean that, let's say if a fractional reserve hedge fund that happens to do both payment services and crediting services for people existed, where it's in the name and it's written on the contract explicitly, and everybody involved is informed about the nature of the process, so then you would no longer consider it fraudulent, right?
Yeah, if it's explicitly stated, this is a hedge fund, we're going to invest your money for you. Basically, you're investing your money in them, hoping they make it big. That's fine, right?
All right, yeah.
Yeah, my only issue is they're calling it a bank.
Okay, yeah, then I think the primary issue was simply this semantic distinction. But since we're already here, because I agree under the current way how bank accounts are created, and yeah, I will even accept with just calling itself a bank, if that's fraudulent, all right. But basically, yeah, since it was actually a question about how interest rates would behave in a system no longer controlled by a central bank, the question is really just does it still exist that there will be crediting institutions who can credit more than they have in deposits, as long as so both the person getting credited as well as the depositor get informed about that fact. And since that was the actual issue that this whole debate started over, I am glad to basically have the confirmation that you wouldn't have anything about it like in concept.
Right. So like, yeah, I'll just elaborate on that. So this is like kind of the second half to it. So would these institutions like this come about? Now we can agree they wouldn't be banks. I think sure. Because they're no longer banks, there might still be hedge funds and stuff, but they wouldn't be nearly as widespread as they are currently. Because right now, every bank on earth is operating as a hedge fund. Whereas if you didn't have this fractional reserve nonsense, there would be actual real banks. And maybe you wouldn't even need a bank anymore if you could just throw it in a Bitcoin wallet or something. Like, there is clearly a large demand, a large desire to have actual hard currency, which isn't being constantly debased, right? People want to put their money away and store it. Like, not everybody is an investor, and you don't want to be constantly investing with every penny you own. Like, that just isn't how people act, right? So if you can't get away with fractional, like, the only reason why every bank is doing this is because they can get away with it. And so those banks who don't do it, they're not making as much money because they're not engaged in the fraud, right?
Yeah.
So there's not going to be anywhere nearly as widespread. Like, if there had never been a state, they'd probably all be storing gold, because you know, commodity theory of money. But there was a state, so we've shifted way off of the unhampered market. I reckon probably Bitcoin is going to be money next, and you can't engage in fractional reserve with Bitcoin. Everybody, you know, if you tried engaging with fractional reserve in Bitcoin, you'd have a CoffeeZilla video made of being about you next week, right? Everybody would see that's a scam. You're taking my money away, right?
So what I want to say about that is like, so we're basically talking about the possibility of fractional reserve of a fractional reserve system. I'm not going to call it fractional reserve banking just because of that first part. The possibility of a fractional reserve system within the anarcho-capitalist society. So, I basically, there are in a post-central banking world where the government doesn't meddle with the currency anymore, one of two things is going to happen. The first one would be direct commodity money. So like people owning certain types of real commodities beyond what they need for themselves, because they know a lot of other people will also accept them in exchange for goods and services. That is the one possibility, that a post-central banking society would basically be more or less a barter society, just with certain barter goods becoming very prominent. The second option is that there will actually be market-based currencies, so currencies in the sense of something that can be exchanged, which is, however, not directly tied to a commodity, so something that is simply a pure representation of the exchange value. Sorry for using the Marxist term here, but like I still think you know what I mean when I talk about like a pure currency that is just based is just based on the market trusting whoever is the issuer of said currency,
like Bitcoin, right?
And right. But like in this system, this would certainly be pluralistic. Like, I don't think the whole world would use specifically Bitcoin in order to do their stuff, basically. So it would either it's a market-based pluralist currency system, or it's a full commodity money system. And like, as in the relationship to interest, commodity money system, the concept of interest wouldn't make sense anymore. It would just be industrial profit, since like interest is directly defined as money specifically just in return for you just owning currency / just lending out currency. And like, if you only do this stuff with real goods, then what you're essentially doing is you replace interest with industrial profit. And I have far less problems with industrial profit than with financial interest. And it wasn't the point of the original discussion anyway. It was just to show commonality. So in that commodity money system, the whole concept of interest would already fall away. So the interesting one is, what if we got the currency pluralistic market money system? So, well, I think that in this current, you may interject, yes.
Yeah, I don't think it would be pluralistic at all. I don't think it makes any sense at all to talk about competing currencies. So the reason for this is, to whatever extent you have multiple like monies, and I'm putting that in air quotes to be clear, you are going to have barter. Like, let's say you had 1,000 different things considered money. Well, then you're back to bartering with people who aren't using the same money.
Yeah.
Like, that's the entire point of money, is it's a universally accepted medium of exchange, right? So to the extent that you don't have that, you're back to bartering, right? And barter has all these problems. Like, that's why people move to money, because barter, it has all sorts of issues with it.
I understand. Okay, it's just that most of the ANCAPs I talked to, and by the way, shout out to General ANCAP. He really wanted to be shouted out in this video. He's a good friend of mine, a very good faith libertarian. So I had to shout him out. But this moment just reminded me. But most ANCAPs I talked about so far assumed that their system would be pluralistic. So I thought you shared this assumption. But now I'm curious in the sense of like, how do you think the market would choose one particular medium of exchange?
So they choose that medium of exchange like naturally, the same way they would come to a commodity money. You know, if I'm in a community and 70% of people are using Bitcoin as money, then it benefits me greatly to start buying Bitcoin and using Bitcoin in exchange. I'm way more, and you know, if I've got to like, oh, I want to trade with Farmer John, oh, but he's still using gold. Oh, I'm going to have to go down to the shops and get some gold. You know what, I'm just going to go to Farmer Jane. She's accepting Bitcoin. I'm going to go to her. So then Farmer John, he's like, why'd you stop buying from me? It's like, dude, I have to get gold if I want to trade with you. Just use get Bitcoin. And it starts benefiting him to start using Bitcoin, and slowly it just propagates out like that, right? You find a medium exchange which is widely accepted, and then it becomes more widely accepted, and it just snowballs until you land into something which is good enough, right? It doesn't have to be the absolute pristine best currency, and this is why, I think Bitcoin is going to be money, as against anything else. It might be that there's some other way you can make a cryptocurrency which is theoretically better than Bitcoin if it had been implemented before Bitcoin, right? But the fact of the matter is, I can go down to like a lot of shops will have like, hey, you can pay with Bitcoin here, right? None of them are having, you can pay with Litecoin or Ethereum or fucking NFTs or whatever, right?
Yeah.
I can pay with Bitcoin, I can't pay with these other things. Unless I'm on the dark web, in which case I need Monero.
Yeah. All right, why don't you think that people would simply say, okay, I accept Bitcoin and Ethereum, and so nothing would ever have like the market pressure essentially to centralize the currency. Or how do you think that would happen?
Well, because then they're still having to do this like trading. Like if I say I accept gold and silver and copper, like if we take the reduction case of that, I just accept anything, right? I'll just accept whatever goods you bring me. Well, that sounds a whole lot like barter, doesn't it?
Yes. I'm sorry, but I can't hear you anymore. Like,
No, sorry, I thought
your
you'd like
light is lighting up, but
I thought you'd agreed on that point. So like yeah,
I agreed on that point, but like,
so I might have just been breathing
I
into
just
my
thought
mic.
I had an audio issue. I didn't.
Okay.
Yeah, no problem.
Yes, like that's the basic idea. If you can't
All
have
right, yeah.
multiple competing monies because money has to be universally accepted. And the second anything is universally accepted as a medium of exchange, like why on earth would I set up the infrastructure to also start accepting something else at the same time? You know, because that costs me money if I'm running like a shop. It costs me money to like set up a new wallet for whatever the hot new dog-based cryptocurrency is, right? Like it's, I'm not going to want to do that. If I understand Bitcoin and I know Bitcoin and everybody's accepting Bitcoin, then I'm just going to go Bitcoin, right?
I am going to concede insofar as like I will say that if your assumption is true and you're making a compelling case for that, if your assumption is true, we get to Ancapistan and it has one singular hard currency, then there will then financial interest beyond the mere operational cost of the crediting institutions of the investing institutions will in fact still exist. So like I will concede on that particular point that if you're right that it's going to be a hard singular currency, I can very well imagine it having positive interest rates, so net positive interest rates, yeah. And yes, so I talked about everything I wanted to talk about. So I talked about why it came to that discussion and what the actual point was. We found an agreement in that I admit that in the particular case of something calling itself a bank and not properly informing its customers about fractional reserve practices, it would be fraudulent, while you admitted that just theoretically, just from a pure NAP perspective, there would be no problem if they did it with full disclosure to their customers. And I will also make the admission on my end that if we assume a hard singular currency, I do think that interest rates would be as high, if not higher, than they are right now. So would you be okay to leave it at that?
Sure.
All right. Anything else you wanted to talk about, or?
Nope, I think that's good.
That's good then. Oh, all right, great. It was shorter than I expected, but I enjoyed you being good faith, so have a nice day.
Yes, thank you. You too. All right. I still got time, so I might as well do post-debate VC. Get onto no Discord. Invite link. Give it that much time. Okay. Pop that out. Hello.
Hello.
Howdy.
So, ever had someone like make such an overt concession like that before?
Well, he did say, like, hey, by the way, I'm going to be very good faith for this, and
So to speak.
good on him, he was, you know.
Yo, it's getting full.
Economics, so that's really cool. Sometimes we forget you're an economics bro too.
Mm-hmm. I would say, though,
By the way,
there are people who
ETH was-
know way more about economics than me. Like, I don't study that shit.
I mean, I think you'd probably do fine against like an MMTer.
Yeah, probably. I mean, they don't know anything.
So ETH was mentioned, and I just want to say I don't know if it was like being compared to Bitcoin as a good thing, but to my understanding, ETH doesn't have a cap, and it works on a proof of stake, which is not based. Bitcoin is far superior.
Didn't they used to have a proof of work?
Maybe it once did, but I know it operates on proof of stake now. There was a lot of pre-mining going on too.
It did.
Talk about Ether?
It was a few years back where it switched from proof of work to proof of stake.
But it also doesn't have a cap, right?
Pretty sure it does. Let me go look.
I'm almost certain it doesn't, which if anything just makes it a more fancy fiat.
Well, if you're talking about Ether, there was this huge split in Ether community because of people disagreed, and they created Ethereum Classic that to this day I believe exists. I don't know if it faded into obscurity or not.
You'd be
I
correct.
some a few months ago.
There is no. You'd be correct. There is no maximum supply limit for Ethereum.
There you go. Not base. Don't buy Ethereum. It's more like a company at that point. You're investing practically in a company.
Mhm.
It's not decentralized.
Well, as I understand it, the utility for Ethereum is just the smart contract system and the Ethereum computer.
Smart contracts are cool.
Okay, what the hell even is a smart contract? Is that literally just, I can generate a token that says, hey, I generated this piece of data?
Does anybody know the specifics of that? I don't want to talk in places I am less equipped to.
No.
I know that the way it's been described to me.
Halakaku, Ewan Tick History, and Stephen Michael Davis are my favorite YouTube channels. Big ups. Thank you very much. 35 euros.
So I have a question. So what's stopping in a free market society from having a fiat currency and a fractional reserve banking from ever happening in a free market?
Sure, if it's a free market, you're not going to have fractional reserve banking because that's fraud, right? I went over that in the debate, so I won't repeat it here. A fiat currency.
Yeah, I know, but then yeah.
So what we mean when we say that a currency is fiat is just, let's just let this be a currency. Let's just allow random paper pieces to stand for currency. Now, how is that going to come about? Because I can very easily print off as much paper as I want. It's not particularly complex. Even if you have a very complex design on there, like, there's a reason people do counterfeiting. It works, right? It's not very challenging to print off as many pieces of paper as you want. The only thing that is hampering that, even a little bit, is that if you do that, the government is going to throw you in a cage, right? If you don't have that because you're in a free market, then people are just going to be printing pieces of paper till their fucking printing presses wear out, right? They're going to be printing off a whole load of paper. So it's a very, very, very easy currency. Now, this is a concept, I got it from Saifedean Amoose and his the Bitcoin standard, right? An easy currency is something that you can make a lot of very simply. This is a very bad currency because it doesn't store value very well, right? This is as against a hard currency. A hard currency is something which is very difficult to get more of. Gold is a very hard currency. You can't get a whole lot of it, right? You got to go mine it out of the ground. You got to go find some. Pretty difficult currency to make. Now, Bitcoin, once it's reached its cap, it's an impossible currency. You can never make more Bitcoin than the SHA algorithm allows for. You just couldn't ever do it. It's mathematically impossible. There's a hard limit to how much Bitcoin you can get.
Money and scarcity is what you're saying.
What did you say?
Yeah.
Sorry, I didn't hear what you said.
Okay, got it.
Okay.
Oh, so good money has scarcity behind it, basically?
Yes, in the economic, as in scarcity as in there's a limited supply.
Okay.
So anyway, Zulu, are you currently working on something else except for your brain page and your next few debates that you have planned on?
Yes, I'm working on a tick video as well, a response to his response, to my response.
And then he's going to make a response to your response to his response.
And other Snack tubers will create another responses on those responses.
Yes, and there'll be a response to that response.
Wait, so just make one open response video.
Big YouTube content.
Like, just think of all the responses they will be giving you and then respond to that in one video.
I mean, this video will be fairly expansive. It's not just a tick response, it also responds to all sorts of other things.
In this video, in this response video, will you be clearing up Nick's problem with conflating real empiricism with Humean empiricism?
Yes.
Okay. I noticed that one going through his objectivist theory of history video.
Yeah, like to be clear, like the reason why that occurred is because the nominalists have basically monopolized the term empiricism. So that in modern philosophy, if someone hears empiricist, they assume sensualist, because nominalism implies sensualism. If you want to know more about that, it's just either waiting for my video to come out where I'll explain it shortly, or watch Leonard Peikoff's History of Philosophy lectures.
I have another economics question.
Sure.
If you could concisely answer it, I don't know how much you want to dive into it, but you debated this one a while back, but what is the issue with pegging a fiat currency or an uncapped currency to something like Bitcoin, where we do have a for sure cap?
Sorry, can you repeat the first part of that question?
Yeah, what is the error? What is wrong with pegging like a fiat or uncapped currency to a stable currency or to a capped currency like Bitcoin?
Okay, so like you can print off more dollar bills, but those dollar bills can still be you can still get Bitcoin or gold for them or whatever.
Yeah, let's pretend the dollar was pegged to Bitcoin.
Right. So I mean, if it's truly pegged to Bitcoin, then they wouldn't be able to print more off, right? Like it would just be a receipt for Bitcoin. Like this corresponds to 500 Satoshis or whatever.
It'd be like the same issue with like checking for golden reserves, except
So like if they start loaning that Bitcoin out and there isn't actually a one-to-one correspondence between Bitcoin receipts and actual Bitcoin in the vault, then you've just got a fractional reserve again. Now, the economic problem with that is that you then get an introduction of fiduciary media. So you get notes which don't actually correspond to money. And this is what causes the business cycle.
Gotcha.
Yeah, do we have
Did
anything
anyone
else?
see that Bitcoin?
Oh, sorry, you go ahead.
Oh, mine's irrelevant.
I was just going to say, does anybody
So
have
why
anything else
can't
they want to
they-
discuss?
So why can't a bank also be an investment firm too?
Because that's not a bank. You can have the same office where you run a bank and an investment firm, but a bank isn't an investment firm. So you can't have
Okay.
you
So
can't be
it's
taking
kind
money out
of
of the
one
vault
business
and investing
doing-
that and have it still be a bank.
Okay. But like you said, with the current technology, banks won't be necessary anymore, in a way.
Yeah, it's probably just going to go Bitcoin because then you don't have to trust some institution to store your money. You can just have it yourself.
You have so your phone becomes a bank basically, or connected to something.
But you still can use bank for like assets, technically.
Sure.
Yeah.
Yeah, you
well,
can warehouse
assets,
whatever
wouldn't
you
that
want.
be kind of like? Yeah. No, imagine it also being a pawn shop.
Yeah, that is fractional reserve banking. It's safety deposit boxes, and then the other door into the safety deposit room, it has a big sign that says pawn shop, and people can come in and buy your assets.
So So technically, modern day bank, like today banking, it's a place to store, a place to invest, and a place to get a loan. And you could get a loan probably if you have a collateral in exchange if you fail to repay the loan.
Sorry, can you repeat that?
So today's banking, it does the business of holding money, investing your money, and loaning money. Like you could get a loan if you have a collateral on you in exchange if you fail to pay that loan back.
That is how they operate right now, and often they don't really give much of a damn if you don't pay back because they'll just get bailed out, right? And they're engaged in fraud anyway. So
true, yeah, they have that incentive. Yeah.
Like that's that's why all these, like, remember the big fucking housing collapse of 2008, right? Like the banks were loaning out money to people who they knew would never be able to pay back, right? But they didn't have any incentive to actually figure that out or care or do anything of the sort.
So basically, they're able to get money from people who are still in debt and from big banks or from the Fed, technically.
Yeah, they just get bailed out whenever their bad loans go bad.
Yeah. Have more monopoly money.
Would there be any reason to do something like pegging the dollar to Bitcoin? And like, let's say they swore we can verify this dollar represents this many sats and these particular sats. Is there any benefit to that?
I mean, you might as well just have the wallet yourself.
Just use the Bitcoin. Yeah. I've just had that debate before, and I don't remember the counter arguments, but
We need our physical money to go to the rural area and barter with people.
you should just get phones, man. I don't know what to say.
But I do think another promising development in the realm of money is gold backs, where it's like they literally laminate a thin sheet of gold to represent like a certain amount of money. It's like it's actual gold in there, you know?
Yeah, those are cool. I think that's being printed in Nevada. They have that weird technology where they can literally microprint that gold onto that fabric to have it exactly weigh that gold to the dollar value or something.
What is that? Is that a good idea?
Yeah,
Isn't it
gold
going
back.
to suffer from wear and tear?
Well, like they laminate it so like it
Am I missing
is somewhat resilient.
Yeah. No, but then that's a cool thing. You have two ways of putting gold onto money. Either that or have a piece of gold bar inside the fabric paper. Like there are two companies that are doing that now.
And like that way you don't actually have
No,
to
that's just too much.
you don't actually have to trust a bank, because no bank on earth is going to actually store the gold properly for you and give you receipts for gold.
Yeah. No,
like these are in
have
use
you
in
heard
certain
the
places.
banking called gold?
Don't you think this is a little too much issue when it comes to like this? Too many issues with verification will occur, right? Like how do you know that every time you receive one of these bills that that's actually gold in there, actually laminated in there? Like
Well,
it's far easier to just reference the blockchain with Bitcoin, right?
Well, yes. I think Bitcoin is better, but this is still promising, right? This is certainly a lot better than just having a monopoly buck where you have absolutely, you know for a fact it doesn't actually represent money.
Fair enough, yeah.
Well, we keep on saying Bitcoin, but I think we should just say like proof of work cryptocurrencies in general, because like Ravencoin is basically Bitcoin with some extra features built in and 1,000 times the supply, and they actually managed to keep the cost down for doing a transfer. It's incredibly cheap and it's instant. Like you click to send and it's gone. It's already in their wallet. They could already see it.
Yeah,
So-
but Bitcoin has a technology with Lightning Network that is overcoming their probably fees, and it has the name and accomplishment to its name that makes them much more reliable and more well known.
I don't trust it because the ability to do chargebacks on the Lightning Network, that you could defraud people, and they can end up never receiving their Bitcoin at the end. So
Never heard that.
Lightning actually builds in the capacity to do fraud into the Bitcoin network.
Is this fake news?
Nope. No, this has happened. People have tested this one out. Yep. All you have to do is close your chain, and but before the funds is actually distributed, and so to look like they're going to actually get this Bitcoin, you've already gotten your item, and then a week later they find out that they in fact never got their Bitcoin. Yep.
News to me. We'll have to look into that.
I suppose the
That's probably
question then is,
Oh, sorry.
if the query is what is going to be money, is that enough of a problem such that it can overcome the fact that everybody on planet Earth already knows what Bitcoin is, unless you live in some like dirt poor shithole, and you've never gone on the internet, right? Every civilized individual knows what a Bitcoin is, and like that is a huge first mover advantage. Nobody really knows like this Ravencoin thing.
Well, there's also Bitcoin Cash, which is the original blockchain of Bitcoin. It actually shares. I mean, it has the name in it, but it also shares the initial block, the Genesis block, with Bitcoin. So,
Right, but Bitcoin still has the first mover advantage.
I'm not sure how much that's going to matter in the long term. I guess we'll have to see. But as it's been playing out, plenty of adoption has happened in the broader crypto space. So yeah, Bitcoin's still the leader, but I don't think past performance is an indicator of future results in this case.
Well, I do think
it would require a mass exodus.
I do think a lot of this adoption outside of Bitcoin is just pure speculation. Like they're thinking, "Oh, I'm going to invest in this fucking random dog-based currency, and then if Elon Musk tweets right, then it'll moon, right?" Whereas I see a lot of people who are actually like buying Bitcoin because they think it's going to be money, and it's already being used as money in some places, right? So it's like that's a big first mover advantage. Like I don't see anything else overtaking that. I mean, maybe it can. Maybe tomorrow the US bans Bitcoin, and then it's going to be a lot harder for Bitcoin to take off, right? If all these big countries start banning it, and then maybe something else can take off. Like, I mean, because I do agree with the commodity theory money. Like, I think in an unhampered market, you never get something like Bitcoin. But we aren't in an unhampered market, so who knows what can happen? All sorts of crazy shit can go down.
Well, Zulu, let me ask this. If countries were to ban Bitcoin, don't you think that gives rise to the potential of the value increasing?
Why would the value increase if people... Because your grandma isn't going to buy Bitcoin if she thinks it's banned.
Maybe scarcity.
Yeah, so just like other things we see in the markets, right? Like you can see this with the drug market, right? These drugs become more valuable on the streets because I guess the word wouldn't be scarcity, but
it's like people
it is to get it.
Demand drugs because they want to get high, right? But people demand Bitcoin because they want to be able to trade with people, right? Or speculate or whatever. Like, I don't see a lot of demand for Bitcoin if someone thinks they can go to jail for 20 years for using Bitcoin.
Fair enough.
Yeah, but didn't they also imprison people in the 30s if you had gold on you?
It was later than that.
So they do have the power to actually punish people for holding something.
But it's like gold also is a commodity. Like you can sit on that, and so like maybe you get like some fucking breakaway society where they're still using Bitcoin or whatever. Like I'm not gonna say that's impossible. Like it could happen, but it's gonna really hamper adoption if you can get thrown in a cage for it for 20 years for using it. Anyway, my time's about up, so I will bid you adieu. Thank you everyone for coming on. I appreciate it. And thank you again for the
from me.
€5, Kalako. Sorry, what did you say?
I came here to debate Liquid Zulu, and he's running away. Can't believe this. Typical and cap.
Yeah, this guy's a coward.
Classic.
I did notice the Sarwark middle finger, and I was like, oh, that's a cool profile. Of course it would be you. It's got the best fucking profile pictures.
It's such a good picture.
When was that? Was that the LNC like just now?
His hand on his head, all sassy.
Was that like at the recent LNC?
Oh, yeah. I wish I was there, bro. I would have loved to talk to Dick Sarwark.
Oh my god! Did you see the other one where it was like the Reno reset, and he like runs into someone and falls over? He's like, "This guy assaulted me."
Yeah, that's great. Classic.
Oh, Sarwark is the best lol cow.
It's because the guy wasn't wearing a mask.
Anyway, I'll see you guys later.
Man, I can't fuck